Hello everyone, welcome to This Week in the Markets. Information contained in this video is intended to be general advice only and should not be relied upon as financial product advice. Furthermore, the advice has been prepared without taking into account your objectives, financial situation or particular needs. So you should, before acting on the advice, if you choose to act, consider the appropriateness of the advice having regard to your objectives, financial situation and needs.
Welcome to another round of market updates. Today we cover Bernanke's testimony, Draghi's speech, economic data, and various markets. Heading into the testimony, the expected grilling of Bernanke took a back seat as Big Ben dished it out to Congress. Bernanke underlined the efforts of the Fed, stating that the bank has done all it can and that the rest is now up to policymakers when it comes to balancing the desire for economic improvement now with the need for fiscal tightening in the long run. Bernanke defended the bank's policies as politicians attacked the Fed for not addressing a sluggish economy, essentially putting the onus back on the government rather than the Fed. Markets took confidence from Bernanke's bullish tone as equities surged only to be brought back down by the FOMC minutes. A number of Fed officials were willing to slow down the pace of asset purchases as early as June if the data continued to improve. The news spooked the markets, erasing most if not all the gains. To emphasize the minutes, Bernanke stated that the bank could begin to taper the asset purchases in the next few meetings. Meanwhile, Super Mario delivered his version of the State of the Union during the week. Draghi underlined that the Eurozone is more stable through their monetary and economic union pact. The euro-dollar erased earlier losses and advanced approximately 65 pips after the speech. French and German manufacturing PMI coming in above expectations may have also given the euro some boost, even though the PMI numbers came below 50. In FX markets, the euro is seeing support at the 1.28 handle and resistance at 1.32. The pair received a small boost from Draghi's confident speech, as well as French and German PMI coming in above expectations. The pound Aussie has continued its rally from March lows to trade at its highest levels this year. A weakening Aussie has mostly been responsible for the bullish trend as it rides along the upper Bollinger Band. Technically, the stochastic and the RSI are suggesting that it is overbought in the short run. The Euro Aussie has continued its rally, trading at this year's highs just short of 1.35. The pair continues its rally in between the 10-day MA and the upper Bollinger Band, with this bullish tone likely to stay in place until there are signs of a short-term reversal. In equities, the S&P 500 has fallen through short-term support at 1650 and approaching 1632 support. The positive data from consumer sentiment and the Case-Shiller index may have added fuel to a short-term bearish trend as it fuels the Fed's argument for reducing the pace of asset purchases. The positive economic data in the US has also shown in treasury markets as US bonds across the board had a sharp increase in yields and subsequent fall in prices. The move reflects money moving out of safe haven bonds and into riskier assets, which may be bullish for equities. That's all for this week. On behalf of Trading Pursuits, would like to wish you profitable trading.